Friends, in this video for iThought Advisor, we are going to talk to you on the topic making your portfolios future ready. From 2018, we have seen one type of investing. Two waves of COVID, lot of volatility, excessive fear, a very polarized market, all this has sustained for nearly 4 years. These 4 years have been remarkably unique in the sense we have never seen one sector, one theme, one type of investing sustained for such a long period of time. Bull markets in the past have definitely been shorter. This one has been extended. The factors that contributed to this are unique to this time. When we come out of this phase, when our economy starts to grow again, when investment starts in the country, when asset creation picks up and gathers momentum, investment will also change. We will see investment thinking also transform. We have been waiting for this transformation for these last 4 years, and the more it got delayed, more investment opinions went towards defensive investing. So what did we see in these 4 years? These 4 years, we saw investment going into very defensive ideas and themes. Mostly these were FMCG companies, or these were private financials, or these have been small and mid cap companies which don't have debt and had decent growth. The macro changes where you saw prices of commodities crash and then rise, and you also saw demand going through wild fluctuations. Parts of the economy stopped, but consumption continued. So all these contributed to whatever we are seeing today in the bull market. But economic circumstances change. When economic circumstances change, investment choices change. Markets get tired and bored of repeating the same themes. So they reinvent themselves. Investors reinvent themselves, investment managers reinvent themselves, the sell side reinvents itself. So all these changes are likely to happen when the investment phase gathers momentum and growth returns to the economy. So the portfolio should prepare for this. So you need to basically think about how growth will impact sectors which are currently undervalued and which will benefit from that growth. So far, we have not needed to do that for the last 3-4 years, because growth was first coming down, then it went into negative, and even now we have not even gone back to the size of the economy we were prior to COVID. But the portfolio needs to prepare for an economy which rises above its pre-COVID level. So that's the real growth phase for which your investing needs to change and adapt towards. This today is a difficult thing for a lot of us, because we are so conditioned in these 4 years to think in a certain way. It's almost become a religion to think of investing in a certain way. Nothing unusual. Every bull market causes this kind of a polarized investment thinking, but market gradually sheds that thought and then transforms itself under a new skin. So as an investor, you possibly need to start that before the market does, so that you sell out of extremely expensive stocks before it's too late, you keep some cash, you wait for a correction in the other side of the market where you want to make your investments, where those sectors and companies which will benefit from future economic growth will be available to us at valuations which we like. So it's a lot of preparation, it's a lot of mental conditioning. It calls for exiting investments that have done extremely well for you, and it calls for a defensive preparatory investment stance. It also calls for looking at themes which have been out of favor for a very long time. Infra has been out of favor for a very long time. Reform has been out of favor for a very long time. Likewise, commodities have been out of favor for a very long time. In your own way, you need to discover how you want to play the growth trade in our economy, and these are some themes which could come back in favor over a period of time and create investment returns which we never dreamt would happen. So it's happened before, but The players in the current market cycle probably were not in the market when it happens before, but it will happen again. So those who don't have that experience in the past cycles need to still get themselves into the game and start preparing for that. So the portfolio must be made future ready. You need to adapt, you need to think beyond the present, and you need to give emphasis towards safety and exits from very, very expensive companies. This video is just the beginning in a series of videos where we will tell you what you need to do going forward and how you can adapt to the emerging Indian economic scenario and the market scenario. Thank you for watching this video. Do share it with your friends. Thank you.